This is the financial accounting tutor back with another financial accounting problem. So this problem deals with depreciation. So let's get started. Better Products Inc. purchased a piece of machinery for $500,000 that has a salvage value of $20,000. The machinery is supposed to have a useful life of 5 years using the straight line method. The machinery also has a useful life of 1,000,000 hours of production using the units of production method. The machinery had the following amounts of hours of production in the first 3 years. Year 1, 100,000 hours. Year 2, 300,000 hours. Year 3, 200,000 hours. Calculate the depreciation per year using the units of production method, and also calculate the depreciation rate per year using the straight line method. Okay, so let's see how we're going to calculate this. So calculate depreciation per year using the units of production method. So first we got to know what the units of production method formula is. So the formula is going to be, we're going to have the cost minus the salvage value. And that is going to be divided by the useful life of the machine. Life of the machine. Useful life of machine. Useful life of the machine hours. Okay. And then we got to calculate depreciation rate per year using the straight line method. So the straight line method is going to be cost minus salvage value. And that's going to be divided by estimated useful years of life. Okay, so let's get started. Let's see, this is going to be units of production. And this is going to be straight line. Depreciation. Okay. All right. So now we got to come up with our rate now. So the cost is going to be 500,000 minus 20,000. And then that is going to be divided by 1,000,000. So let's put some commas on here. All right. Okay. There we go. All right. Then we just take the 480,000 divided by the 1,000,000. And we're going to have to make this bigger. All right. So we got 48. And then for the straight line, we're going to have, it's going to be still be the 480,000 because the numerator doesn't change. And the useful life is 5 years. So 480,000 divided by 5 is 96,000. So this is the depreciation per year. And this is the depreciation rates per hour. Okay, so there we go. All right, so now let's do this. So now we got year 1. We got year 1. We've got year 1. We've got year 2. And we've got year 3. Okay. So now all we got to do is just take, for the units of production, all we got to do is just take the depreciation rate per hour, and we're going to times that by 100,000. 1, 2, 3. And then for the next year, it's going to be the 0.448 times 300,000. And then for year 3, it's going to be 0.48 times 200,000. So let's make sure we didn't enter this in millions. So we need to get rid of 0. Okay. All right. So just remember with the doing the units of production, you just take the depreciation rate, which is 48, times the hours in this case. It might not always be hours. It could be something else, but you're always going to find a depreciation rate, and you take that times the hours. So for year 1, we got 100,000. We take 100,000 times 0.48. For year 2, we take 300,000 times 0.48. And for year 3, we take 200,000 times 0.48. Not too bad once you get the hang of doing it, but that's just how it works. You'll just take the depreciation rate times the hours in this case. Now, the depreciation per year is simple. It's just 96,000. We've already calculated 96,000. 96,000. And this is how you do the depreciation rates for straight line and units of production. I'm going to be making more videos. Hopefully this was helpful to you. If it did, please hit the subscribe button so you'll stay up to date. I'm going to be creating a lot of financial accounting videos, and I want to see you pass financial accounting.